Okay, it is May 15th, and I want to go over the DR sessions for today. So we're going to start with the after session. This is from Sunday night from 7:30 to, what is that, 2 a.m. This session here, we're on the 5-minute chart on ES. And the first thing what we do is we get a confirmation of the downside. So we are expecting lower prices. Obviously, it comes back up, and those that would have traded in here, let me slide this up a little bit, make this a bit bigger. Those that would have came in here and traded this fair value gap, which fails, it's right on this DR line, the IDR line. So most people probably would have taken this trade right here, and then they would have taken a short right here. You know, it could have came up to the midpoint. Doesn't matter. They never hit it. So they would have taken a loss there. So then we get a break on the opposite side. So this is this DR session is not a successful one. It's a failed one. DR would have lost you money here. Now, had you taken this right here and taken this trade right here as a midpoint coming back to the middle, your only hope would have been to take this trade right here, and you would have gotten, you know, let's see, 3R there. You've taken that trade. Now, regular DR rules are after it's confirmed. You want to confirm DR. This is a higher risk trade. However, it is trained that way. In some forums, they talk about it's so close here that if it comes in the middle, you know, you can take basically a guess, because nothing's closed. At this point, nothing is giving you any indication of where it was going. It closed, it's still here. It closed right up here and then started and came up. So you're in the middle of the range when the first hour stopped. So you taking this trade was pure luck. I don't see a reason why you would have taken it. I just don't see a reason for taking it other than it's in the middle of the range and you're guessing that you're going to go down. You started here and you went up. So in theory, you would have been looking for longs anyway, not a bearish signal. So this one, sure, could have worked. In reality, it was a loss over here. But we'll leave it here for those that want to say they would have taken that trade. I don't think most would have taken that trade. But, you know, just saying, I would never have taken that trade, because my rules for when I do DR, it has to have a confirmation first, and then I'm looking for ICT entry points to take my entries. So for me, in my rules, I would not have taken this trade. Some people could have taken that trade. Okay? If I would have taken a trade here, I was trading something else, but when I did this, I would have lost today on this trade right here. But when we get a close above, since this invalidates the DR IDR session, now I'm looking for why would I have continued gone up. Well, let's just put in some ICT things. Let's first get rid of this. Let's show you some ICT markings. This was a recent short-term low cleared. Okay, it's a higher time frame. This would have been the last hour, a few hours, several hours. There's the low. So it cleared that, came up, it cleared this right here. So now we're in the 2022 mentorship model for ICT, short-term high cleared. So now we're looking for fair value gap. We got one here. Fair value gap. 1 minute fair value gap. So you could have taken an entry right there. Right there. Your stop would have been, close this off. Your stop should have been below this candle here at the minimum. A lot of people take it here for higher risk. I don't. I take it to the bottom of that candle. Minimum 2R. So 2R would have been right here. Extend this out. You get your trade. So DR failed, ICT worked. If you're following his logic, taking out a swing low, a higher time frame swing low, then you come up for a market structure shift by taking out swing highs. You could have done this one or this one, so either or. Took out a major one, look for displacement, we got it. Here's our fair value gap, we have it. We took the entry right here and we go 2 to 1, done. There you go. That's your after DR session, how you would have been successful. Could have been successful. Again, this is on the 5 minute. You could have taken other trades here on the 1 minute. I'm just showing you on the 5 minute because DR is supposed to be done on the 5 minute time frame. At least that's what this is plotting on the 5 minute. So the overnight DR session, this is the London, 3 a.m. to 4 a.m. Eastern Standard Time. The session started low, went high, so you'd be expecting higher results. You get confirmation here. So then where would you have taken your first trade? Well, it really wasn't. There's no fair value gaps. There's no volume imbalances here. There's really nothing here to take a trade. So on DR wise, we want to take the retirement setup, which would have been around here. So let's just say we would have taken this trade here below, one tick below the DR line. Because of it confirmed on the upside, we don't expect this low to be taken out. I don't believe the 81% rule. It's actually more like 71%, but either way, 70% is still pretty awesome. So let's just see if we get a 2R here. Well, you get 2R here, right there, right to that tick. You probably would have taken it to the next candle because it's right on that tick for actual spread, but either way, you got 2R there. If you took the retirement setup right there, and the only thing you're doing is, hey, you're realizing that this says you're going to go up. You're trusting the process. You're trusting that it's going to go higher. This should not be taken out, and so you're placing a trade on this IDR line, and you're going to 2 to 1 ratio. Whatever your risk is, 2 to 1. Get in, get out, and be out. Because if you didn't get out here, you'd be getting out there if you went 2 to 1. But if you went, I wanted to go above this high, and you didn't move your stop to break even, this was a loser. Obviously, it was a loser. It came down here. Okay? Let's just go back. Oh, so, you got to manage your trade. Me, personally, what I do is I go 2 to 1, and then when it's about 60% or so, I move my stop up, take a partial, and then I'm extending mine out and letting one ride, and I'm kind of trailing my stop. Other days when I don't have time to monitor price action like that, I will just move my stop to break even, and if it'll either take me out, I'll take a partial, or it'll take me out at break even after I've taken a partial, or I'll take the full ride, the full thing. I would have gone to here. My trading rules, I'm going for the next high, and I'm trailing this up. I probably would have been stopped out in here after I've taken a partial. So for me, this was an okay trade. Was what I would have done there. Okay. As far as an ICT trade goes, you take out the high here. You've got a high. You've got, I'm not sure. I not really see a whole lot of great opportunities in here. The one that I would have liked to see would have been at the end of the session. So I don't know. Technically, it's not really in the session. For me, I wouldn't have taken any of this. This just doesn't go in my rules. If you would have taken this trade right here, you would have been stopped out right here. Taking this trade for a long, it was a loser if you did this, and this would have been an ICT trade, just to be fair, because I trade both models. This would have been a loser right here. You lost this one right there. Now you did probably get partials, and you probably did take a break even, so it would have probably been a break even trade. That's 1.5. Whoa, yeah, that's over. We would have gotten a partial out of that and break even, but you didn't get anything else. And depending on how this actually went, if it went down or then went up, don't know how you would have applied that. But me personally, don't move my stop until I get this, so it wouldn't have taken me out. I would have got broke even and taken a partial. The trade that I do like, though, is after the hours, and I like this one right here. Right, isn't that not? Yeah. Right here. I like this trade right here. And the reason I would like this trade is because if you marked it out, okay, that is a short-term high cleared. Then you've got, let me just get this thing off here. Right here, you've got short-term low cleared. So, higher time frame, liquidity taken, all this liquidity here taken, broke structure here, came up, come into the wicks, fine. We broke down displacement as we came down, took out all these lows here. Displacement here, fair value gap. Let's name that here so you see it. 1 minute fair value gap. Take this trade right here for a short. Stop would have been above, right at the DR line. And then for 2, would have been right there. Hit the profit. Okay. If you would have gone for, the ICT way, where it teased you to go down for higher target, you'd have gone over here for this target, for this low. And if you did that, you would have been, what was that? An 8R trade. But in reality, probably would have gone here and then trailed one. So I would have taken a partial here and then trailed some. Okay, so that's the overnight DR session. Here is the regular DR session for the, the main New York session. Started here. We didn't get oops, let me move this out of the way. We didn't get a confirmation till right here to the upside. So where's your trade? Well, this came all the way up. For this, I want to throw on our Fibonacci lines. Show you this. Okay, so now you've got standard deviations. You got up to half of a standard deviation up. Came back down into -3, the 30 percentile range. It's it's half of the middle range here. You would have taken an entry here to the long side for DR wise, and put it around half is usually what's taught. Go to 2 to 1, and you hit it right there. There's your trade setup. Okay. Now this also would have been a decent trade setup for ICT concepts. So what you could have taken was a mitigation block, which is, I'm going to put this on here. It's a mitigation block right here. It's a mitigation block. Why is that a mitigation block? Because you have a low, failed to take out this low, it came up, and then came down, traded into it, and came rallied up. So you could have taken this right here. This isn't long enough to be a rejection block. I wouldn't count that as a rejection block. Some people may say, hey, what about this? This is a rejection block right here. It goes down to the tick. It's pretty nice. I wouldn't have traded. It's not a long enough wick for me in my rules, so don't really wouldn't count it like that. But you would have taken that trade, same trade right there, so they kind of line up nicely. There you go. There's your ICT trade setup. Not be this one. Would have done the same as DR. So that's May 15th DR sessions.